About it.
Nvidia has been interesting in that even with all these lofty expectations, some of the scuttlebutt this week was that Rubin might actually be ahead of schedule and might be able to allow you to incorporate some more aggressive numbers for 25. That name just, it doesn't look back, it seems, Paul.
Yeah, the interesting thing here is people assume that it's egregiously overpriced because the stock did indeed triple in 23. It's going to about triple this year. So how can it be cheap? Well, in the meantime, their earnings and cash flow have grown much faster than that. So on a PEG basis, right, price to growth rate, I still think Nvidia is reasonable. It's not cheap. I think it's reasonable. And I think it's more reasonably priced than some of the other better named tech stocks that people have kind of lured themselves into because they see relative value opportunities. I don't get that. And the Blackwell chip, what you're referring to, yeah, they might have some manufacturing issues in the first quarter. But the interesting thing is they're so far ahead with the technology that if they have any manufacturing stall, it is going to just delay sales that will come to them on the other side. It's not like they're going to go to Advanced Micro Devices or Intel, the gang that can't shoot straight. They'll be just fine, even if they end up having a manufacturing delay. And hey, we're all human beings. That may happen at some point.
Just to go back, Paul, it's just striking me what you said a couple of questions ago. Every fresh new dollar you get goes to Nvidia or Amazon. Is that what you said?
No, I'm just saying that I have a much broader portfolio, including the cast of characters that you're familiar with. But if money was to come today,
right,
I'm really going to only be aggressive with those two names among the mags.
According to a new memo from Melius Research, Nvidia might surprise Wall Street with a significant announcement that would power up its earnings. The possible surprise? An unexpectedly early release of Rubin, its next-generation GPU processor. Ben Reitzes, an analyst at Melius Research, says there are indications that Nvidia may ship its Rubin GPU processor 6 months ahead of schedule. Even though Nvidia had informed us that Rubin will be released in CY26, Reitzes said, "We think investors were anchored to the C2H, heavily weighted to 4Q'd in volume due to supply chain indications. Alternatively, Nvidia might release its Rubin chip earlier than expected in the first half of 2026. According to Reitzes, there are indications that point to an early release, such as rumors that Nvidia is pressuring SK Hynix to prepare its next-generation memory sooner, that Taiwanese partners are allegedly developing designs for AI servers based on Rubin, and indications that TSMC intends to increase its advanced packaging capacity in line with these developments. In June, Nvidia revealed Rubin. It is the replacement for the business's Blackwell GPU, which is anticipated to be introduced more widely in the first few months of the next year. If the rumors are true, Nvidia may be able to achieve revenue growth in 2026 that is higher than the roughly 30% consensus expectation thanks to an earlier than expected release of the Rubin processor. Investor worries about an AI bubble and the limitations of the law of big numbers computing would also be allayed by an early release. According to Reitzes, speeding up the Rubin release would allay some of these worries and would raise buy-side target multiples. In theory, EPS would power up sooner, he continued. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Amazing partnership with Nvidia.
Well, it's almost like, though, no matter what part, let me use this analogy, of a car, you need metal for it. And the metal, in your case, is these chips. I know you have a relationship with NVIDIA. Jensen Huang, the CEO of NVIDIA, just came on the Clayman Countdown a couple of weeks ago after earnings. And here's what he said about all the people, all the companies lining up and putting in orders. Listen, and then we'll respond.
Our demand is greater than our supply. It's hard to at this moment, keep capacity and infrastructure available for every one of them. And so we're working super hard to get there as fast as we can, which is the reason why we're ramping Blackwell so hard.
Can you tell me what kind of shipments you've gotten of the Blackwell chips, which are the newest ones?
So Blackwell is in transition as we speak. And I quoted yesterday that our current backlog, as a couple of days ago, is more than $3.5 billion. And more than 1/3 of that backlog is Blackwell, which we expect to fulfill during the early part of 2025. Because as Jensen said, he's trying to ramp that capacity in the manufacturing to fulfill all the demand. So we are already have Blackwell receipts in our supply.
Okay.
And then we're going to convert that backlog into revenue as we enter 2025.
Okay, but to be clear, they're in transit, or you actually have some of the Blackwell chips?
We have some of it, but we obviously need significant more, and then we expect the receipts of that as we enter the new calendar.
Nvidia is learning that expectations can be a significant burden. In its Q3 FY 2025 report released last month, the leading AI chip maker once again exceeded earnings and revenue projections. In a market that now views extraordinary as commonplace, however, the reaction was ambivalent, and the stock fell marginally in the days that followed. Nvidia's declining gross margins as a result of switching to Blackwell, the possibility of heightened hostilities between the United States and China, or possibly even more significant macro worries about AI market saturation could have alarmed investors. Yanis Zormpanos, a prominent investor who ranks in the top 1% of TipRank's stock pros, is unconcerned with the recent performance. Nevertheless, he sees it all as a part of the greater scheme of things. According to the five-star investor, this pullback is a healthy consolidation phase that is giving the stock the time it needs to absorb its recent gains and build a firmer support base. Zormpanos cites several justifications for this optimistic view. The performance and growing use of Hopper and Blackwell GPUs provide more proof of the company's leadership in the AI revolution, and the data center segment continues to be an amazing growth engine. The investor anticipates that after a complete ramp-up, margins will stabilize in the mid-70s, despite a slight decrease brought on by Blackwell's operating costs. Zormpanos adds that the stock's value benefits from the ongoing top-line boom with plus 70% gross margins. Additionally, the investor is unconcerned about a possible trade dispute between the United States and China because Nvidia has been expanding its revenue streams globally, especially through significant alliances in Japan and India. Nvidia's price-to-earnings ratio of 55 is notable in terms of valuation, but Zormpanos claims that the company still offers an astounding 1,744.91% premium on future earnings. The investor claims that there could be a significant upside in the next quarters due to the discrepancy between the current valuation and strong growth premiums. Zormpanos recommends Nvidia shares as a strong buy with a promising long-term outlook. Analysts on Wall Street are also completely on board. Nvidia has a consensus strong buy recommendation with 37 buy and 3 hold ratings. It has gained almost 22% from its 12-month average price estimate of $176.14. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts. So hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
First, here's Oracle, one of the major companies building out these data centers. I think they'll show incredible strength. Amazing, really fabulous sales, because there's practically an endless demand for data centers. Let's see if they're still planning to build those things like crazy. Quickly, Nvidia stock, of course, the data centers are filled with that, was uncharacteristically weak today. Made no sense because HP Enterprise, one of the biggest customers, put a blowout quarter last night and said the business with Nvidia is incredibly strong. We'll learn more from Oracle Monday evening, and I'm sure we will find out what the story was with Nvidia stock, too. The story that some had today, and the rest, no doubt, will get on.
We'll examine Nvidia's position in relation to the other stocks that dominate a billionaire quant's investment plan. Cliff Asness established the international investment management company AQR Capital Management in 1998 with the goal of providing its clients with favorable results. AQR Capital Management has established itself at the forefront of economics, behavioral finance, data, and technology over the course of more than 20 years of studying market forces and using insights to efficiently manage client portfolios. With remarkable performance fueled by its AI capabilities, Nvidia maintained its leadership in AI technology, as seen by the 206% increase in its stock price over the previous 12 months. O'Malley predicts that Nvidia's earnings would increase to $3.62 per share by fiscal 2026 and sees a $25 billion opportunity in the global expansion of AI. Recent product developments from Nvidia, including as its sophisticated H100 and Blackwell chips, new AI architectures, and Rubin R100 chips, are anticipated to support future expansion. Analysts find Nvidia's forward P/E of 35.74, based on 2026 earnings expectations, to be appealing due to its outstanding growth prospects and technological leadership in the market, even if it has a high current P/E ratio of 71. Nvidia remained largely unchanged. At the end of the first quarter, Nvidia's stock was trading at $90, but today it is trading at $140. Since then, AQR's position with Nvidia has grown by 30%. This indicates that, in contrast to some of the other megacap stocks, AQR allowed its position size to increase while taking some of the profits off the table as Nvidia's shares were soaring. Given that the quant hedge fund holds 0.07% of Nvidia's outstanding shares, this indicates that Nvidia is actually AQR's top megacap stock selection. After recovering from the 50-day line to regain the 140.76 buy target that was initially crossed in late October, Nvidia's stock increased 3% to 142.44 last week. Although shares dropped 1.8% on Friday, they managed to hold the 21-day line. A move over the 150 level, which is above the bulk of a recent trading range, might also be used by investors as a backup or supplementary entry. Since late June, shares have been moving sideways. That being said, not all Magnificent Seven stocks are made equal, because Nvidia is the one business that clearly dominates the others. Earnings have skyrocketed due to the unrelenting demand for its accelerators used in AI computing. According to the average of expert predictions compiled by Bloomberg, Nvidia is expected to generate $71 billion in profits on revenue of $129 billion next year, up 49% and 52%, respectively. With a 193% gain, the stock is the lone Magnificent Seven business in the top 50 and the seventh best performance in the Russell 1000 index this year. Nvidia's megacap counterpart's spending is largely responsible for its success. It is anticipated that Microsoft, Alphabet, Amazon, and Meta Platforms will collectively invest over $200 billion in capital projects to increase processing power in 2024. Additionally, they promise to spend a lot more money the following year. Nvidia will benefit greatly from that, but investors are wondering when the other companies' investments will be profitable. According to McManus, played by Janus Henderson, I wouldn't be surprised to see the Mag 7 sort of break up because gravity is going to catch up. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.